This is not like you build it and they come. This is not, I'm going to rely on someone else that says they have 1 million investors. You're going to hear crickets, right? You're going to be, this is an act, and you have to step back for a second and look at what this really is. This is an opportunity for you to potentially raise capital from anyone over 18, and it encourages creativity and thought and compliant partnerships to get in front of as many people as possible that might care about what it is you're doing.
Hello, everyone, and welcome to another episode of Test, Optimize, and Scale. If you follow the investment crowdfunding industry, you know Etan Butler. It's a privilege to have him on the pod today. He's involved with literally the top Reg A plus issuers, many of them to date. You want to look at different verticals, different success levels. Etan could speak to it all. He's seen it all. And again, is on that leaderboard. You look at the top issuers, he is there. He's the founding chairman of Dalmore out of New York. Etan, thank you for taking the time to join the Test Optimize Scale podcast today.
Jason, great to be back with you, brother. Appreciate you having me.
Absolutely. I always enjoy our conversations. You bring a sense of realism that I don't always hear in the space. I think we both emphasize education and making sure issuers are fully equipped to understand the vehicles, the exemptions, the filings that they're using to maximize what they can do with their fundraise.
Totally.
And thought we'd begin with your background, familiarize the audience a little bit further. How did you get into this space? Where does your story begin?
Great. Yes, I started as a day trader coming out of college, and I was a terrible trader. And I realized I wanted to still be in the business, and I wanted to kind of gravitate towards being the house, not the trader in my case. And so back 25 years ago or so, I met my partner, Oscar. We did a number of things together, which led to us setting up Dalmore as a broker-dealer in 2005, initially focused on institutional investment banking. And then at the time of the Jobs Act, we saw an opportunity to get involved as a broker-dealer to help companies raise capital over the internet, online at scale through some of these relatively new or changes to some of the existing securities exemptions. Initially with Regulation D, we have focused more on accredited. And then as Regulation A became more popular and more utilized, we gravitated towards that exemption. And today we operate the broker-dealer, of course, and we also operate a number of affiliated entities. Dalmore Technology focuses on creating capital raise technology and tools for issuers with a real emphasis on efficiency, friction reduction, and user interface and experience, really observing what many of the issuing clients that have kind of gone through our services, our broker-dealer services really need. So we're super focused on the technology side and also on the advisory side. How to use these exemptions? Am I a good candidate? What should I expect? So our approach tends to be very sober and conservative, and I think hopefully people appreciate that, and that's how I would sum it up.
And the numbers speak for themselves. You guys have worked with over 1,000 issuers, have seen over 1 million investments, over $1.5 billion raised. So it makes sense that it's somber, maybe deflating unrealistic expectations a bit, talking about what milestones need to be hit so that you can see greater success. What do you see most commonly? You get a new inquiry or introduced to a new group. Imagine a lot of your issuers come from introductions. Reg CF, Reg D, Reg A plus, side-by-sides, fractional. I know you work on it all. How do you advise companies on which exemptions to use?
So first, it's interesting. We look at these exemptions kind of like different chords to an instrument, right? Or tools that are available for issuers to utilize to raise capital under a certain structure from certain people, certain investors, right? Reg A and Reg CF allow issuers to raise capital from pretty much anyone over 18 internationally, outside of certain problem jurisdictions. Where in general, there's an association when you say like crowdfunding. People think of Kickstarter or people think of a marketplace. So there's a real opportunity to educate and advise issuers that don't have a centralized place to really get a comprehensive understanding of what these tools really represent. So we have applicants, all types of people apply, from someone with a great idea that's raising their first dollar as a startup that needs $1 million or $500,000, all the way to a company that has NASDAQ ambitions that's doing a $75 million raise because they have a big customer base, and everything in between, from very vanilla bond issuers and REITs, all the way to cannabis, psychedelics companies, Web3 based companies, and everything in between, consumer products, et cetera. So I think we've seen it all. It really comes down to each individual issuer has a different reality, has a different budget, has a different community, has a different type of product or service that's relevant to a community or not, has a different way that they look at the value of the marketing and promotion that comes along typically with these raises versus a business-to-business company that might not appreciate that or see value in that, right? So you first have to understand the issuer and what their specific needs are, what their budget is, what their expectations are, what the capabilities are, what the community is, what industry they're in. Then you're able to understand what their capital needs are and which exemptions to utilize to try to achieve those, right? And so it is a consultative type of an approach, and that really depends on a number of different factors. And so we just try to be really helpful in helping guide our issuers based on what we're observing, based on what we're seeing work and not work well, right? It's not sign up and we have all these investors. We want this to be sustainable and real. We don't want misunderstandings. And while in the industry, you tend to see the press releases and the emphasis on a lot of things that work well, we like to talk about what's not working well. And because ultimately we're aligned with our issuers. And ultimately we're a regulated entity and we take that very seriously. So we want to be upfront and transparent about setting the proper expectations. That said, this is where I'm personally am super bullish about this industry. And I think we're still at the very early stages of it. And because it really represents a unique path to unlock the private capital markets. Hopefully one day even closer towards the organization that we see in the public markets. We're quite far from it, but I very much see how that's going to happen. And we hopefully we continue to be a big part of that transition.
And what do you see happening there? Last year's bit over 1,400 Reg CF campaigns, far less Reg A pluses. I think right now here in May 2024, there's 380 live Reg CF campaigns, about 580 in April. There was a filing that had a lot of them close at the end of April. King's Crowd reports about 40 live Reg A plus campaigns. So limited number of groups really utilizing these vehicles. I've heard about different types of government incentives for investors, for issuers, more awareness from startup incubators and accelerators that have government contributions. What do you think is going to be the turning point to move to more mass adoption from founders to use these vehicles?
There's two types of, I would categorize in two types of ways to leverage these exemptions. One is a one and done exercise, right? I need to raise $5 million. I'm going to launch one offering. I'm going to be super sensitive on my return on advertising spend. And I either have a community or I'm going to need to kind of, build a community. That's one way to approach these exemptions. The other is, hey, wait a minute, I could raise for CF 5 million every year, or I could raise from Reg A up to 75 million every year. So I'm not like just focused on the first investment opportunity. I'm focused on building my brand and my platform and doing right by these investors so that they could hopefully participate in my next round. My first round is $1, next round is $1.30. I've made some acquisitions. I've grown to a certain point and continue to utilize these exemptions going forward. It works in particularly really well for perpetual issuers, right? Funds, REITs. They're not looking to just raise X dollars through Regulation A, let's say. They're looking to be qualified to raise up to $75 million per year. That means they want people to reinvest dividends. They want to, they want to pay out yield. They want to, continuously be building community. And the value in having a loyal and active community, I think, is very, very high. As long as you do right by them, as long as you have world-class technology, and as long as you have super effective marketing and promotion, these exemptions really can make a lot of sense for certain companies.
Matter of cracking the code, right? We can use these traffic sources, whether it's through partnerships or advertising or outreach, various types of PR, including financial email newsletters, and know it's replicatable, it's scalable. And hey, if we spend X amount of dollars and see this cost per acquisition of a lead and are speaking to a limited partner prospect, an LP offline, or any type of prospective investor, given the environment, if we're able to bring it on at this level and scale it up, even if it takes a few months to get there and really understand what's working, we could continue to use that for months, for years. Like you said, we're in our infancy, 5-10 years down the line. Which REITs are going to be at the forefront? Which investment banks, which groups that are constantly bringing on investors? And how can they get to that 75 million a year now? Maybe that limit even goes up during those time windows. Hear different speculation, of course, but we'll all see together. But once you're able to validate the marketing, the investor acquisition as a whole, we'll call it, digital allows for scale. You could do it at much larger levels.
Correct. 100%. And if you do right by investors, you pay them on time, you meet expectations, you communicate, you're transparent, you deliver, you're that much better positioned for, to continue that relationship on a more perpetual basis. But again, there's all types of issuers. There's the Reg CF one and done, and then there's the, there's the, let's say, the typical fund manager has a few $100 million under management, looking for distribution. We try to educate them of all the resources that are available for them. A fund manager has $200 million. They're in real estate, let's say. They could utilize Regulation A to widen the lens to be able to bring in the other 90% of investors who are not yet accredited through compliant, proven workflows in an efficient way for really good risk reward from my perspective, right? As far as costs that go into setting it up. All of a sudden, they're building community. They're driving it. It's their platform. They're not trying to rely on others for distribution. The other things that a fund manager could do is, with a relationship with us at least, is they could look to get certain Salesforce members licensed and registered with our broker-dealer, which would enable for them to be able to pay commissions in a compliant way to their sales force. That's another really interesting thing, and not something that most people are talking about. So there's a number of different ways to leverage these exemptions and the relationship with the broker-dealer that can really empower a company to expand their platform and build a captive sales force and utilize these exemptions in a really profound way.
And again, allowing for more volume. We're talking about how the actual investor community can grow on some of these rounds, and how a group on the real estate side can announce their next round, their next properties, their next opportunities to a much larger cohort at that point. What about those inquiries? What about those applicants? What do you look for as validators? Is it strictly around the deal? Are you looking at audience size? Do you have recommendations if that audience size is too low, and building the community? And I ask because I know it's such an important part of the piece of the puzzle, and referenced it a few times here.
Yeah, I mean, it's about setting expectations. It's my belief, I think our firm's belief, that this isn't a very actively managed process. This is not like you build it and they come. This is not, I'm going to rely on someone else that says they have 1 million investors. You're going to hear crickets, right? You're going to be, this is an act, and you have to step back for a second and look at what this really is. This is an opportunity for you to potentially raise capital from anyone over 18, and it encourages creativity and thought and compliant partnerships to get in front of as many people as possible that might care about what it is you're doing. right? And so you have to look at it more broadly, I think. So I think those that are fortunate to have existing bases of customers, fans, followers, subscribers, et cetera, are that much better positioned to have those people that would understand who they are, hopefully value the relationship, and may want to participate in what it is they're bringing to them, versus those who have to build that community on their own. So it's setting expectations. It could work for anyone with the right compelling, as long as you have a compelling message, because the reality is in this generation, everyone's addicted to their iPhones, bombarded with information. And how are you going to stand out and get someone's attention as quickly as possible with something that's compelling? That's not only going to be compelling, but it's going to cause them to go to a landing page and actually put in their social security number, payment information, and sign a subscription agreement, right? So it needs to be something that you need to articulate your opportunity in a really efficient way. And that's why it's very important to approach this. Part of it is and a very important part is marketing and promotion, what you guys do, right? It's really leveraging those that have had experience working with many issuers, have seen success, have seen failure. It could really level with you, because that's such a big part of raising money on the internet, in a similar way as e-commerce leverages these same characteristics, right? I often say that a lot of this industry operates in a very similar way to e-commerce, because the investment minimums are very low, and you're able to market and promote, obviously compliant marketing and promotion on things on social media, et cetera, right? So these are impactful messages that get people to take action, to observe your opportunity. And then there's funnel management, there's abandoned cart technology, there's showing up across other feeds, right? So there's a whole, e-commerce-like component of this that's critical if you expect to bring on hundreds or thousands of investors, which many of our issuers do.
An important part of setting the expectations, and I have to think in the same direction that you do as well, because I'm a marketing agency. Let's face it, marketing agencies don't get a good rap.
You guys have the hardest job ever, because right? Because people never end up having as much money as they would have liked. And you're the barrier between their success and failure, right? So it's not fair necessarily, but it's a very, you understand this, you've been in the business. And so the idea of like setting expectations from the start and making sure people really understand the risks, what they're getting themselves into, and how much work it takes. Yep. But when those things come together, that's where you see a lot of these, successful offerings, right?
Exactly.
But that's why we're all into, education, and I think we probably turn more issuers off than we do on. In other words, it's a very, that's not a very salesy process that we have. It's more like, this is what it is. Yeah, we're very experienced at this. Yes, we could be helpful. Yes, we could talk with you and focus on what's working for others that are similar to you. But here's what it's not. It's not you sign up and people come flocking to your offering.
Absolutely. And it starts with those discussions at the beginning, not over promising, being able to do everything you say. So not just pointing at the wins, but pointing at the industry and showing, the top 10%, they're doing great. The bottom 50%. This is why. This is what we've learned. This is why we've set up our models accordingly. I like painting a picture of how much traffic needs to get to their offering page, similar to the e-commerce discussion. And as you're mentioning, I'll say for a Reg CF, 50,000 visitors per $1 million raised, reflecting a 2% conversion rate, $1,000 average investment from 1,000 investors. I know funnels that you guys build actually produce higher averages. Maybe it's 3,000 on a Reg CF, and I'm just throwing out there's the numbers out there based on self-publishing numbers. Reg A plus, sure, it's a bit higher, but not substantially on the average investment size. At least projecting conservatively, I would rather have an issuer driving those volumes of traffic and saying, okay, how are we going to get 250,000 people there? How are we going to get 2.5 million people there? What are the building blocks to get to those points? And what's the model that we're going to be using to get there versus run it? We've seen great returns before. You're going to be in a good place. And I will point out how important what you guys do is, meaning if we're running advertising, if we're running outreach to a funnel that's not converting, I mean, the conversion rate is the single most important metric. It's like you said, it is almost like e-commerce, selling shares on there. You're looking at impressions, clicks, conversions. What's the conversion rate on the site? I think that's why Dalmore Tech has been so effective on these initiatives, because it drives a high conversion rate. Can you speak to that a little bit, and the funnel management, as you're saying, how these deals are presented, how they're sold to thousands of investors to substantiate the funds for these rounds?
Yeah, I mean, up until about, was it 2 years ago or so, which is really when we started getting very focused on technology, our role was pretty much limited to the regulatory and compliance components that go into launching these offerings. In some cases, distribution, and we saw an opportunity to develop tools and technology that we, under our own watch, saw a real need for, both from a efficiency and a friction reduction perspective, but from UI UX, which we believe is critical for this generation, because over 80% of a lot of these investments happen on iPhones, right? Which is where we do our banking, we do everything, right? Everyone's on their devices. And we also saw an opportunity to create a more optimized kind of efficient cost structure as far as processing and fees for credit cards and ACHs and wires, et cetera. At a time when we were onboarding many real estate issuers and REITs, and they just had no interest in paying more than they had to for processing and commissions, et cetera. So that together, that really drove us to really focusing on technology. We also have been focusing on, marketing is a very important thing. And our view on marketing is we have assistants in-house, but the marketing plan generally involves working with others like you that specialize in specific areas of the crowdfunding that we've seen deliver for other clients, right? So it's not, our process isn't sign up with us, we're going to do the marketing, one stop in that way. We are a one-stop shop in many regards, but when it comes to marketing, you always have to be looking at what others are doing successfully and being willing to pivot. You can't just say, sign up with us and we're going to do it all. Okay, we might be good at certain components of it, but there's PR, there's digital marketing, there's all different components of this, and you want to really be open, and to be able to work with the right team, the right players outside of the platform, especially, and that's really been our approach. And
as a marketer, I'm always looking at what other issuers are doing. What are investors responding to? I do a report every Monday morning with my team. I put out educational content, and when we're working on strategies, it's section 2 of the strategy after the industry overview, so we can become more educated in a vertical and issuer space. What other offerings are out there that are going to be targeting the investors they're going after? So success leaves clues. There's always something to take from it. It's a constant evolving discussion at that in terms of what investors are responding to and how market conditions, current events can affect that. So definitely have to have your fingers on the pulse. Fractional ownership platforms. How have you seen this segment of the industry grow over the past few years?
Probably I would describe it as like an explosion of growth. In the number of, and what these fractional platforms are issuers that utilize these exemptions, usually Regulation A, to fractionalize assets like single family homes or racehorses or collectibles or music royalties or you name it, and art. High value assets, $1 million painting, right? How many times is that going to trade on Sotheby's? Once every few years or whatever it is. Who has $1 million to go and buy a Picasso, right? Now, what you're able to do through these exemptions is to offer that same $1 million painting, but first you smash it into $10 shares, right? Or $100 shares, whatever it is.
Yep.
And you offer those shares to all those fans that would have loved to buy a $1 million Picasso, but they're never going to be able to. Hopefully one day, but not now. But now they could get exposure to that for $100. And they could also build a portfolio of the Monets and other pieces of artwork as well. $100 in each one, $1,000 in each one. right? And then they have a path to potential liquidity, right? They have a bid and ask on some of these platforms as well. We help facilitate secondary trading, right? So you could buy the shares of either of these assets. You could build a portfolio, and you could also have a path to be able to offer, for sale or buy more in the secondary market of those shares. That to me it very closely resembles what is happening in like the blockchain and tokenization space. However, it achieves very similar outcome as far as by leveraging technology, right? So with these securities exemptions, the blockchain itself isn't sufficient. You need to have a SEC approved qualified, transfer agent that handles the cap table. You could have a blockchain mirror that cap table. You also don't need to quote unquote tokenize securities to fractionalize them, right? You could simply offer them at whatever share dollar amount you want per share. So so you're creating a really seamless, environment for issuers to be able to offer shares in different assets. We had one issuer that won the Kentucky Derby, one of their horses that we helped fractionalize in 2020. We had another issuer that won another Kentucky Derby last year, Mage, a different issuer, right? It's so cool to be able to see, you have fans, you have investors that are participating in something that they really get a lot of joy from, and in this case, financial benefit from in these cases, not always, right? But it's a way that really opens up investment opportunities into high valued assets, right? For the little guy like me and you, right? Who now we're not accredited, who could just you could go and access that, build our own portfolio. So we've seen a lot of these different types of issuers come to market, and we've seen the success of some, and we've seen the challenges of some, right? It's not a simple thing to build your own platform, right? In your own community base, especially in an environment where things are gravitating more towards super apps. People want less apps. They want to be able to do more on one piece of easy technology. We don't have to keep signing up and this and that and flipping through different things. Right. Passwords. So it's trending towards a more of a unification in that way. So there's going to be some platforms that make it, that grow and evolve and acquire. And there's going to be others that can't, just have a hard time figuring it out, and for being cost effective enough to build community and make a profit over time. So it's certainly been a very fast growing sector of the Regulation A issuers that we have.
Still about building that community, that audience, as you're saying, getting that crowd effect. Everyone wants to see that line around the block, based off traditional capital raising, models, dynamics of, what do they say? Everyone wants to be first, to be second. They want to see other investors validate the deal and then hop on. That really is where that crowd effect occurs. So being able to tell that storyline about barrier to entry, now you can invest into these assets that have these huge potential upsides, and participate in front of alongside influencers you follow, friends and family, whatever the traffic source may have been to get you there. And I know you guys are at the forefront of that, so it's very interesting to hear firsthand.
Yeah, no, it's been an interesting ride. It's one of it's constant innovation, right? We're at a time where technologies meets new regulation, meets innovation, and we find ourselves kind of at the core of that. So it's certainly been a thrilling experience so far, and we hope it continues. And again, it comes down to you need to create. Ultimately, we need to continue to bring more efficiency into the market, which makes the experience for investors better and for issuers better, right? For something to be sustainable, investors ultimately need to see return, right? It's not you're only going to be able to buy X number of investments in CFs before your wife says enough. I need to see return, or whatever it's going to be, right? So again, we try to just bring reality into it in a very serious way from the beginning. Yes, it needs promotion. Yes, it needs marketing. Yes, if you have a celebrity, then obviously you have a lot more eyeballs, and that's a wonderful thing. But But it's not just about marketing and having a celebrity and taking whatever to whoever, right? That's not sustainable, right? And it's not a exercise and then you're out. It's it's doing right by the investors. It's doing right by the industry, so that all of us could benefit from continued growth based on data, and that's really what's of most interest to me.
That's a good way to say it, and yes, I think we all want to see a higher success rate industry-wide. Already see a higher success rate than other avenues towards fundraising. But those learnings, those findings, doing what we say, having good actors on good projects all across the board is what's going to get us there. Speaking of which, speaking about success, would love to get some recommendations out to the audience, to viewers, listeners. Maybe they have their own campaign live or in planning. What would you recommend that they test out towards their fundraise? I look at marketing as a series of tests, and you need the data to show you what's working, not just the assumptions. So these are likely things they want to do throughout the campaign, but where should they begin?
Okay, so with Securities Council sign off and broker-dealer compliance sign off, of course, you want to be as loud and as effective as you possibly can, to align yourself with more chances of having more people view what you're doing and hopefully invest in what it is you're doing. We encourage creativity and active involvement of the founders, right? PR is very easy to overlook, but we've seen tremendous success for some issuers that have properly leveraged PR and stories that you get in front of millions and millions of people with a very compelling, business that leads to an opportunity to invest in that business, right? Compliant partnerships with others that have big audience bases. In other words, is there a way to figure out how to win before I start? Right, you could start by saying, I'm going to build a campaign. I'm going to do the Jason Fishman test, optimize, and scale. And you're always going to have to do that anyway, right? There's no way around that. But, what helps Jason Fishman is if you show up with a big audience, or if you have the ability to break into a big audience, because then Jason could then build a lookalike audience and he could properly communicate the right things to your audience, right?
Yes.
So that's what we encourage. And that's where we've seen a lot of success are issuers that are able to kind of go beyond just I'm starting from ground zero, from nothing, and I'm going to start building. If you have an adequate valuation and structure that could work for a meaningful cost of capital, right? And especially if you have benefit from that marketing, right? That's key, right? It's very easy to discount, but I think there's a lot of benefit that let's say a CF issuer would get if they're in the products or service business, if they're in the consumer space, right? Then, because you're marketing the heck out of your brand while you're also looking to bring on investors who hopefully will be brand ambassadors and be loyal and encourage others to participate in those products or services as well. So again, these are things that we usually get pretty deep into on our onboarding calls as we interview issuers and talk about what's working. But webinars have been really, really successful for certain clients of ours, really successful, right? And other things. But there's a lot of tools that you have as an issuer that's approaching raising money on the internet, online, right? And number of exemptions and number of additional tools that you have if a broker dealer is involved. We like to cover everything. And because that increases the chances of success and longevity of the issuer of the platform, so that's so far been our approach.
I love that recommendation. You want to have that line around the block, as you're saying, not an empty restaurant sensation. So when you're able to compliantly market, even if it's the first days of your campaign, get everyone that you know there. If you're able to build that audience beforehand without priming, compliantly, do it, because that is what signals to others, and then be able to grow and grow and grow from there. Content calendar, social posts, email, webinar, articles. We were featured here. This newsletter just sent us out. That constant momentum, that constant narrative to get those audiences to continue and take action. And then, of course, the marketing funnel does not stop there. Reg CF, Reg A, we see multiple investments regularly from retail investors. Peer-to-peer marketing, as you mentioned, Etan, ultimate. You want me investing and telling my brother, and the other guys were golfing with, hey, did you check out this group? They're doing fractional ownership, or they're in this vertical. This is what's new, this is what's different, and making sure that messaging is absorbed to the point where that prospective audience can repeat it and can be, selling on your behalf, and even becoming a super user. If you're a B2C company thereafter, maybe they're already users and you're bringing them in as owners. I see these funnels that go back and forth. So I love that recommendation. What about if it's not working right out of the gate, or it's just slowed down a little bit? How do you optimize? How do you manage it to a point of effectiveness and or growth?
Generally, you're stuck with your own business, and so you can't change what you're doing, but you could perhaps better or test or articulate it in a different way that resonates with more people. That is so critical, and that's why it's very important to work with experienced marketing and promotion in that way, because it could be an amazing opportunity, but if it's not articulated in the way that causes people to understand it, be compelled to take action and go and see it, then it's just going to remain a really great opportunity that's missed. In the same way that a startup that hasn't yet proven itself, that might or might not be a great opportunity, if they effectively communicate that, and it's a compelling message to the right people, to enough people, then there's a greater chance that more investors would check that out and consider it, right? So you have to recalibrate everything, some of the language, the colors, the sequencing, and that's why companies like yours, it's been in the business for a long time. You've seen cycles, you've seen things over and over again. You've made changes along the way. And that collective understanding, I think, is very valuable to a company that's approaching this, because they're operators most of the time. They're CEO operator. They don't know about marketing or raising money on the internet. And even if they have internal marketing, it's a very different game from online capital raising, right? So I think it's really about recognizing that this is an actively managed process that's going to involve, like everything in life, a lot of pivoting. It's not set it and it could happen. It does happen that people just kind of start and do really well, but that's not the norm. It shouldn't be expected. You should prepare for the grind, and you should align yourself with people that have gone through that grind many times, that are straight with you and are cost effective. And even that, there's no guarantee, right? Yeah. So, you have to approach this level-headed.
Constant pivots, optimizations, like how you said, that's kind of how life is as well. There are outliers to that. Everyone's got that friend that it just all works for, or that issuer that was live for 2 months, 2 weeks, and was able to close everything out, but don't plan for that. Have a whole process to be able to get it to that point. What about scale? You've worked on some of the top Regulation A plus campaigns to date. Any tips, any examples, any consistencies, commonalities between those groups that you could point out?
I gravitate. I love these, like the more, I guess, quote unquote, boring issuers, right? The ones that are building communities and issuing bonds, offering yield to investors, right? It's a very different association than what most people would have with crowdfunding, which is, get in early on something that hopefully will become, very successful one day. That's the hope, right? Doesn't always happen. I like the perpetual issuers, the ones that are funds and bond issuers that are providing an opportunity for the average American to invest in things that typically are hard to find or not available even to many not yet accredited investors. And by doing right by them, by paying them their distributions, whether it's monthly or quarterly, by communicating with them, by offering them a really good technology experience that's seamless and easy and intuitive, it's amazing how much loyalty you could build if you treat people, if you give people a good experience, you treat them right, and you deliver to them. And so I encourage long-term thinking when it comes to these exemptions, very different perhaps than many do, which is, here's a way for you to achieve X by, if you do this. It's like you're setting up a brand and a platform, and you want to use these exemptions over and over again. Once you have investors, if you have success and they see success, then I think they're going to be more inclined to consider the next investment. And that is the mentality that we have. We power a lot of platforms, right? These are issuers that, especially the fractional platforms, they're platforms, they're brands that need people to go and register on them and look at their stuff and shop and decide if they want to get exposure to this and then trade that, right? So that is very different than how one would look at the ROAS on a Reg CF offering that's looking to raise $1 million. Right? It's like I'm investing in building in that relationship with someone coming in, starting with $10 or $100, with the hopes of them increasing their exposure, buying more shares, having $1,000, $10,000 on our platform, and being active. Right? So that's what I see. The other thing I'm that I really see is bridging the gap from the production of these private alternative investments, right? Whether it's CF, A, and D, and how do you meet the institutional demand, RIAs, right? Are RIAs going to have interest in participating in CF? No. Are they going to have interest perhaps in participating in a real estate or an art fund that has like a Reg A issuer that has a few $100 million worth of assets, right? That has a track record. Yeah, that's more like it, right? Especially when there's an element of liquidity, right? And there's never full liquidity yet in the private markets, but it's working towards that for certain issuers with certain structures, right? So that's a super interesting thing that we have our eyes on, which we'll over the next upcoming years, we'll see, I think, more and more activity in, which is how do you get RIAs to allocate to your investment opportunity? There's a lot of nuance in that, but it's something we have our eyes on.
Getting those registered investment advisors to actually participate in those deals attracts whole new communities, maybe even groups that focus more on public markets or just higher levels of the private markets. Absolutely, and I think those are great recommendations across the board. Etan, I feel like I could speak with you for hours here and keep the discussion going. What about listeners? What about viewers? If they want to learn more, maybe speak with you, your team directly, where should they go? Where can we point them?
DalmoreGroup.com. Simple. We have a pretty intuitive process to set up a call with our team. We have a very simple form that issuers fill out. Give us a little color on who they are, what they're looking to achieve. And then we give them the opportunity to schedule a call with our sales team, and we listen and we try to help advise them. If we were in their shoes, we give them the same advice that we would look for based on our experience. And so, definitely encourage anyone that's looking to explore, to learn more, to come to our site, Dmore Group, and we look forward to speaking with you.
And I would definitely recommend taking Etan up on that offer. Not just Regulation A, or every Reg A issue we speak to that's looking for guidance. We point towards Dalmore, but across the board on all the exemptions. So highly encourage you to take Etan up on that invitation. Also should mention we'll both be at the Reg A conference in your neck of the woods. I think that is your area over there in New York. So that's the Reg A conference on June 20th.
Yeah, definitely look forward to seeing you again there, brother. I feel like we're veterans at this point. But great to be here with you again. I appreciate you having me on, and really looking forward to seeing you on the 20th. And anyone out there that's looking to get, dip their toe in or learn more or network amongst folks that are really, kind of active in the online crowdfunding and capital raising space as a whole, I encourage you to consider attending the Reg A conference as well. It's one of the valuable ones. It's pretty buttoned up, and we've been pretty active with the conference for the last number of years. So definitely look forward. Our team will be there.
Absolutely. The industry, a lot of great people, a lot of great recommendations in the room. Etan, thank you so much for taking the time to do this. I'm 100% confident that I'm going to get some good feedback around these recommendations from listeners, viewers. Appreciate everybody tuning in. We will see you next time.
Be well, brother.
Thanks, Etan. Thanks, everyone.